A boss babe who loves to educate her clients no matter what industry they're in. You gotta meet, listen, connect, and watch Natalia Zacharin on the Beauty Pro podcast. She's an accountant turned educator and money coach that is sure to get you educated on your specific business so you can actually know your numbers. So I'm going to stop talking and let's get to it. Are you a beauty or barber pro looking for that push to do that thing you've always wanted to do, whether it's in or out of the salon, spa, or shop? Are you tired of not feeling good enough, smart enough, skilled enough? Are you tired of not getting a handle on your mental health, boundaries, and insecurities? I'm Krystine Sherwood, the Beauty Pro Coach, an internationally certified coach, a salon and spa owner, and your personal Jiminy Cricket. I use my own experiences, good and bad, as a salon owner to help you be more self-aware, authentic, and forward-thinking in your approach to life, in and out of the salon. It's time to reach your version of success with the Beauty Pro Coach podcast. Hello, my loves. It's Krystine from the Beauty Pro podcast, and I am here today with Miss Natalia Zacharin.
That's right.
I got it right. Okay, so tell everybody who you are and what's your deal? Like, why should we get to know you?
Sure. So first of all, thanks so much for having me. I'm super excited to chat with you today. And I own an accounting firm. So it's all about numbers. Where we're a little bit different is we do all the bookkeeping, payroll. We don't actually focus on taxes because we're really good at that side of the business. But what's most important is we do a lot of advisory on what we call it fractional CFO, but it's basically like how to understand your numbers to get to where you want to be with your financial goals. And that's what we do.
Whoa, okay, right off the bat. All right, so what is the difference then between the taxes and the bookkeeping?
Sure. For me, and most people don't really know that there's a difference, and a lot of
Yeah.
firms do both, right?
Right. Yeah.
Uh, I'm finding more and more that they're not doing both successfully. And we actually have a lot of referral partners now that went all in with tax. And so they send us all the bookkeeping piece. Those two functions are really different. So a bookkeeper doesn't typically know how to do a tax return, and doesn't really understand one. And a lot of times I saw that bookkeepers don't even understand how to read the financials. So bookkeeping is not data entry. It should be looked at to understand like what are we trying to put on the financials so that it brings more clarity to the owner. The tax piece is really just compliance at that point. You have to file your taxes. You have to know how much you owe the IRS or the state, or whatever it is, and that's a completely different side. And it's kind of rare to have people that really do both well, and it's rare to see a firm that does both well, because it's really different.
Okay, this is so good because as beauty and barber pros, that is like a huge piece that we seem to be a little weak on.
Mhm.
While there's lots of money and income and cash flow in this particular industry, for whatever reason, we can't seem to get this part right.
Yeah.
I know quite a few estheticians and like spa professionals, some hairstylists who are like backed up in their taxes, like they don't file their taxes, and I'm like, what are you doing?
Yeah, that would scare me to death, but there is help.
So
And yeah,
okay.
absolutely.
So when you hear any business owner at this point, when you hear them say, I need to know my numbers, I need to know where my leak of whatever my profit, I need to know where that is. Is that the bookkeeping side or the tax side?
That's kind of in between. That's definitely more towards the bookkeeping side. That's accounting, not tax. And that is more CFO side. So, like the bookkeepers, like I was saying, typical bookkeepers don't understand how to read financials
Right.
or how to analyze that into actionable steps. And most business owners don't either. The majority don't.
Right.
So don't feel bad if you don't understand the numbers or you don't know how to read a financial. I would say 95% of all business owners don't know.
Oh my God.
So that's okay because there are people that do know,
Sure.
right?
Yes, absolutely.
And so there's a difference between that. And I saw there was a big gap because every time I would talk to someone, because I did all of my own sales for over 5 years. And that's a great way actually. Talk to your clients. That's how you know what's happening, right? Um, so they would always tell me, yeah, but I don't really understand. So even though I'm doing bookkeeping and I think it's accurate and up to date, I don't actually really know, but then I don't know what to do either. And that's why we took that extra step and decided to formulate an entire CFO piece of the business, which is actually growing and really building. And more than 35% of our clients actually engage in CFO services, including our beauty professionals. We have several salons and beauty professionals that use our CFO services. And that's what we do is we analyze that data. We make sure it's first the foundation's there, right? The bookkeeping
Mhm.
is correct.
Mhm.
And then we take that data and we start analyzing it. And then the conversation starts because the numbers tell you a story, but the full story is actually in that owner's head because they know what's happening. They just don't really know how to analyze it.
Right. Okay, so all right, this is so great. I love this. All right, so um you're mentioning it, but the CFO program,
Yes.
what exactly is that? How do people who are the good candidates? How do they get involved with that? Because that sounds like something that is a
Yeah.
necessary thing.
So, really, anybody, I've had people start from the beginning. It's a little expensive for someone that's just starting out, to be honest, because it's very high level, impactful, customized. We can't do CFO services that's just like an assembly line. It's
Mhm.
very customized for each business and each
Okay.
owner because each personality is different
Mhm.
and the business is different because of that. But really, at 500,000 and up is where I would say that gets really important because if you want to grow profitably because your
Mhm.
top line is super important, but the bottom line is actually even more important. And then you want to make sure you have enough cash for that growth. Like, how much cash do you need? How much should you be paying yourself? Who's your next hire? How to become more of a CEO of your business instead of just constantly bogged down on the everyday.
Mhm.
Um, are you going to hire sales and marketing? How do you know what you're getting a return on that? Are you pricing things correctly? Are you, selling? Do you have a cost of goods sold? Like all those little pieces, it actually answers all those questions.
That
So
is
like
so cool.
yeah, we can tell, like we can even see that there's something wrong. We're like, okay, so your payroll's super high compared to your revenue. So that could be lots of different things, right? Maybe you're not pricing high enough, but maybe there's someone on your team that's not very efficient.
Mm. So what I'm hearing is that at least for me, I'm always trying to look for like the standard bar of like to gauge my own self. But what I'm hearing is with this particular program and what you are offering is that there really is no standard bar, not for any industry, right? Like it's all about you, what you're doing in your business, how you're pricing, how you, where you're located, all those things, and you kind of try to beat your best self. Is that right?
Such such a great takeaway, such a great point.
Okay.
So people tell me all the time, well, I can't price differently or I can't do this because that's not industry standard. And I'm like, to hell with industry standard. You
Throw
have to
that out
do
the
you.
window.
I'm like, you're special because of you. Your business is different. How is your business different? Why is it different? People come to you for a specific reason, and it's not because you're the cheapest on the block. And actually, that's not who you want anyway as a client.
Right. So, okay. So, in your experience with working with beauty pros, have you been able to tell them, okay, like, do you help them with like charging for their services? Be
Yes,
like, babe, you got to raise your prices. What are you doing? Like, do you ever do that?
yes, we do. People are really bad about raising prices because they're afraid.
Mhm.
And it's actually not a bad thing to raise prices. Look, all of your supplies and materials now are probably have gone up. Salaries and wages have gone up. Fuel has gone up. Your rent may have gone up. So when you see all of those things are changing, and maybe even some of your other providers, like your contractors, your IT specialists, your marketing specialists, like those prices go up too sometimes. So if all of that has gone up and you haven't increased your prices, it is cutting into your margin significantly. And that's a great time to increase prices because it makes sense. And your clients will actually be like, okay, well, that makes sense. Everything has gone up.
Yeah, yeah, yeah. Okay, so by looking at their numbers, are you able to tell them or do you tell them how much they have to increase?
Usually on a general level, you can see right away because the financials are, if the financials are correct and they're built correctly, you should have the top line is your revenue. Then in the middle, you have your cost of goods sold and your gross profit.
Mhm.
So your cost of goods sold, and people do this a little bit differently. Your cost of goods sold is going to be anything that you resell. But sometimes people put in their wage people in there. So the people that are actually providing the service to their clients. So you can kind of get a labor wage outside of what the admin people are, the receptionist, like all the other ones that are more operations
Mhm.
and admin. Or we could just pull that out. It doesn't have to be like right there. But I always look at the top line of like the gross profit. That's like the first line of defense. If that gross profit isn't over 60%, depending on what's in there, you don't
60% of what? 60% of what?
have income. So
Okay. Okay.
of your entire revenue. And you
Okay.
can, if you have QuickBooks or any other software, you can run a profit and loss by percent of income report. And that I love that report actually. That's like the first thing I look at. And you can kind of see where is the leak. So you can see as a percentage, where does most of your revenue go? And you'll probably find usually in beauty industry, it's not really the cost of goods sold. It's not really the product that you're selling where you're losing money. It's usually labor and rent. That's your most expensive,
Mhm.
maybe
Yes.
utilities. Yes. And
Yes.
so even with that, you can see, like if you're not, the goal is to be 30% or even 40% profitable if you can. That's the
Mhm.
goal. Is to be like about, I would love to see people be 40% profitable. Uh,
Yeah.
yeah.
Is that I mean, what okay.
Yeah.
40% profitable of people in the beauty industry or just in general?
In general, I think product, any like e-commerce product, restaurants, pharmacies, like some of those have a much lower profitability. But in service-based industries, I always think like, how can we get you to 30, 40% profitable, if not more? And that includes your own salary as the owner in there. So your profitability is actually your salary plus the profit because you own everything. So that's what you get to take home. But I like to see that number on the bottom. So like, how can we get you from, if you're at 10%, 12%, how can we slowly build that throughout month over month over month and make little tiny tweaks to get you to that 40%? And that's what we look at.
I love this so much because there is a trend right now in the industry as far as like financial coaching
Mhm.
where it is known that salons, yeah, we can make at least 20, 30%, 40% like what you're saying.
Yes,
But what's happening is they're averaging out, this is from what I have read, they're averaging like 5, 8, like
yes,
very like maybe 10% profitable.
yes,
And that's a thing. That's this. Like, wow, okay, that's
yes.
cool.
It's a thing. It's really interesting. So a typical accounting firm, a typical CPA firm
Mhm.
that's been around for a while, they typically grow about 8% a year. And I think maybe they see 10 to 15% profit, extremely overworked. They undercharge. They can't get, everybody's complaining that they can't get good talent. So what's the answer to that is to be extremely profitable because making good money means you can get really good talent. So that's right there. So you have to charge appropriately to do that. And then you have to understand how to get clients also. So you don't want clients to drop off. So if your pricing is a little bit higher, you're not going to always be a good fit for everyone. So that means you have to be really good at your marketing and your lead generation to get more clients that are a good fit.
Yes.
Yes.
Oh my
So like
gosh.
as an example, like I'm considered to be, am I allowed to curse on here?
Yes, girl. Be you. Be real. Be raw. Okay.
Yeah.
Go ahead.
Be real and raw. I'm in what's considered a shitty industry. Okay.
Really?
Underpaid, undervalued. As bookkeepers, like bookkeeping, they're like, okay, my mom can do it, my sister, my office manager. So anybody with a computer can be a bookkeeper. That's what we're up against. But just to give you an example, we grow about 200% a year compared to the average 8% of accounting firms. I have extremely highly paid, talented people that I love and that are doing an amazing job because I can afford them.
Hmm.
Um, and we're about, an average of 40% profitable also.
Wow, that is okay. I didn't know that.
Yeah.
That's really interesting that your industry is considered a shitty industry when you
Yes.
guys are the ones dealing with all the money for everybody else. Like,
Yeah.
what?
And it's changing. There are definitely firms that have changed, but the typical CPA or the typical accountant isn't an entrepreneur and they don't understand how to run a business. And the only reason why I do is because I've learned, I have mentors, coaches, masterminds, I read. Like, I'm like, no, we're going to do the opposite of what the industry does. And that's what we teach also. Do the opposite of what the industry does.
Yes, I love this. I love it. Disrupt it.
Disrupt it.
Okay. All right. This is cool. The other thing is I saw on your website that you have coaching?
Yes. Well, it's the CFO, it's coaching. So
Okay.
a
That's the
CFO, yeah, is like a financial coach, but there's a lot that goes into it. We talk about hiring. We're not HR specialists. It's all hiring. Who's a good fit, how to have a process, how to make a decision that's not emotional, how to terminate employees
Mhm,
that are not a good fit, or when
mhm,
to. Like, we have all those discussions. We talk about sales, marketing, like making sure that you're getting an ROI if you're doing any kind of advertising or marketing. So it's all numbers based.
mhm.
And then we talk about feelings.
I
Uh,
love it. We can
yeah,
talk about feelings all day. Let's
feelings.
go.
Like, and it's men, women, it's everybody. Like, we work with people that are like in the oil industry, like tough as nails guys. And it's all about mindset and how to make good decisions and not giving up. Because being an entrepreneur, let's be honest, is hard.
Oh my gosh. Oh my gosh, it is so hard. I like ugly cry maybe every other week, maybe weekly. It's the thing. And especially if you're working with families, like family businesses, that can be even more, right? Like what have you seen when it comes to that?
So family businesses can be tough because it's hard to fire family. They're not working out. And honestly, as the owner, you have to have empathy and compassion and do the right training. And always the first thing is, have I done everything as the owner to help this person succeed? Did they understand the metrics? Did they understand the expectations? And at the end of the day, if they're still not a good fit, do you have another place for them or do they have to go?
Yeah. Yeah.
Yeah.
I mean, I have experienced that in my own salon, you know. We
Hmm.
are a family-based business, mother-daughter team,
Hmm.
right? But we have had other family members come in during, for whatever reason, and it blows my mind how like their family and you would think that they're on the same level as you, but they are so not. Like you got to
Yeah.
like anyways.
Yes.
And yeah.
It's interesting. We're all wired differently also.
Yeah.
And there are tests, there are personality tests, but you can't test for character and you can't test for work ethic. And
Mhm.
so those are things you find out when someone works for you. And also, the other thing you can't test for is I find in family businesses, unless everybody knows their exact place and what value they bring, they tend to not understand the entire business and they tend to start feeling like that business is part of theirs too sometimes. And then there's arguments on who's making the decisions.
Yes. Yes, I've experienced that too. That's all, but I feel good that like you're saying things that are confirming to me what I have thought, and I'm
Mhm.
sure what the listeners and watchers are going through too.
Yes,
So that's really that just you know what you're doing. You know what I
yes.
mean? Like it feels good.
It feels good. There's validation in any kind of part. Like, I feel like family feels like they're a partnership automatically, even if they're
Yeah.
not. And even in partnerships or like your number 2 employee or employee that you're really close to, like your manager, they might start feeling that way too. So communication and expectations is super important.
Mm.
Yeah,
Okay.
super important. Uh,
Okay. Okay.
then it still doesn't always work out.
Yeah. Yeah, whatever.
That's it.
Um, so so okay, so where are you located right now?
So we are 100% virtual. We were virtual pre-COVID. Very proud of that. It was super cool to call people, cold call people
Yeah.
basically on the phone and ask them a whole bunch of private financial questions. And people just opened up. And I was like, wow, if I was a scammer. But I think if you know what you're talking about, people automatically drop their guard.
Oh my
So
god. So how
I
did
know,
this happen? How
crazy.
did you do this? Like, "Hi, my name's Natalia, and I wanna talk to you about your money." Like,
Yes.
how did that work?
So I would connect with people first on LinkedIn, so they kind of see me. They saw I had a business. They could see my picture, and then message them and say, "Hey, do you want like just jump on a quick 15-minute call?" I had a lot of people that people always want to jump on a 15-minute call. It's so like
Right.
what is it? Like
Invasive.
yeah,
Yeah.
people don't think anything of it. And then you start the conversation. If it's going well, I always booked out time for more than 15 minutes. So if it's going well, we can continue talking.
Yeah. Yeah.
Yeah.
Yeah.
And that's how I built up the business. There was no Zoom yet, I don't think, or Zoom. I was just starting in early 2019. So I was doing phone calls, cold calling, and reaching out to people on LinkedIn. We've grown a lot since then. But you know what? As a business owner, if you're not getting business, and sometimes things fluctuate, right? Like
Mhm.
sometimes you've got a lot of business and you're doing great. And then before you know it, no one's coming in.
Mhm.
Like
Right.
new clients, you're like, what the heck happened? What's going on? I know you guys probably have a dip a lot. What I
Yeah.
hear is in the summer months when people are on vacation and leaving, that
Yes,
there's
like for my salon specifically,
Mhm.
being in Florida, because that's where we are in a very it's a very seasonal location. It's like a small town fishing village kind of deal. And for us, thank God, we stay pretty steady through June, July. But as soon as for whatever reason, the back to school season starts for us, August, September, October. Oh my God. Like it is just like a dead zone. And I
Yes,
don't know what it is. Every year it kind of changes, but since COVID, this has been the standard.
yes,
And yeah, like we do all the marketing, we do all this stuff throughout the year, but for whatever reason, that dip, it
mhm.
just kind of gets deeper every year.
Yes. I hear that a lot. August is like the worst month because
Yeah.
either they're finishing up their last hurrah vacation before school
Yeah.
or school's starting and then they have all the back to school activities.
Oh, that makes
Yeah.
me feel so good. It's
Yeah.
not just us.
Not just you. I hear that a lot. And actually, the salon, one of the salons that we have as a CFO client, and they're in Massachusetts, same thing.
Wow.
Yeah. So,
I'm so happy.
yeah, the way to combat that is maybe
Yeah.
you'll never get out of that dip, but just to have more clients throughout the year and
Yeah.
be more profitable so you can build up cash in for those bad months. Like some businesses are very seasonal. We tend to be seasonal. People are like, yeah, whatever. I don't care about bookkeeping. Like, I don't want to know anything, which is not the best way to run a business. You're basically
No.
flying blind, and at any point you can fall off a cliff.
Yeah.
But
Yeah.
we get that all the time. And then right before September and October, which are the extension deadlines for taxes, people come out of the woodwork and like, I haven't done anything in 3 years. So,
Oh my God. Oh my God. Okay, so I want to backtrack a little bit because you mentioned that payroll and rent for
mhm.
the beauty industry is the some of the what is it? The
Highest-
most expensive?
yeah, the highest expense, your biggest resource, right? Your biggest expense.
Right.
Yeah.
So, not that we want to put a standard, but what should it be? Like what are the percentages that it should be?
Yeah. So you can't really control rent
Right.
very much.
Right.
You're kind of locked in and you can't really control rent. I do see some bigger beauty store,
Salons, yeah.
beauty salons, and and maybe if they have a lot, and they've saved up cash, they start to own their own buildings, which is kind of cool too.
Yes.
Yes.
Very
And
cool.
that's a great thing to, start planning. It may
Mhm.
take a long time, but you can start planning it. Um, However, so rent, I would say, could be anywhere between 5 to 12% of your revenue. It really
Okay.
depends. I've even seen it a little bit higher. Um, Payroll, a healthy payroll percentage should be 35 or below. So if your payroll is 40 to 50%, that's where your leak is. And so,
Oh.
yeah, and that's like too much for the beauty industry. It's different in other industries. So every industry is a little bit different.
Mhm.
The beauty industry is very heavy on payroll because your entire business is revolving around people,
Right. Right,
right?
exactly. Okay.
Yeah.
So that is so true. I for the longest time, I don't know where I got this idea, but I understood it that payroll needed to be 50% of your
That's
total. That's
Yeah, that's
high.
high,
Yeah.
because then you don't have enough for rent, for marketing, for all your other operations costs, software,
Right.
IT, like all the things that you need,
Mhm.
cleaning supplies, like someone that
Yeah.
comes cleans your salon for you if you have if you hire that out too, and enough money for reinvestment back into the business,
Mm.
building up cash and paying taxes.
Okay. So that
There's a lot.
35% is the sweet spot. That's where you wanna be.
That's where you want to be. So that's going to mean you're going to have people that don't bring in business. They don't have a book of business, and that's fine because they're freeing up everybody else to make money.
Right.
So if you're a solo owner and you're like, I can't take on more business, well, maybe you need someone to help you with doing some of the other things so that you can build more revenue. So everybody that you employ should be there because either they are building revenue or they are helping others to give them more time to build revenue. So your receptionist, the people that wash the hair, the people that sweep, if they're not the same. What I see is when people can everybody jumps in and does what if they have some time and they just jump in and it's an all hands on deck kind of salon, that's really the best one. That's going to be the most profitable because no one's
Mm.
just kind of sitting around. So even if you have someone, that's that normally does hair, but they don't have a client at that moment, and everybody else is busy, rinsing and washing hair, shampooing, that they just jump in and shampoo also.
I love that you are saying that. Thank you. Okay, so the other part now is in the industry, you have those commission salons,
Mhm.
and that's where like the oh my gosh, what am I saying? The labor costs come in. What about those salons that are just rentals? Like the owner has become a landlord and they're renting out their spaces. How does a rental salon like that, how do they become profitable?
So that's going to be a completely different model. I'd have to really take a look, but my feeling
Okay.
would be that those rentals, those are like your contractors, right? They're not your employees. They're contracting from you. And typically people are like, well, if I make at least 10 to 15%, I'm good. But no, because that doesn't leave you enough money for everything else again.
Mm,
So you want to so I would consider that almost like a gross profit. You want to make upwards of like at least 60% on whatever they're giving you so you have like your top line all the money coming in whatever you're paying them if you're paying them anything for as a contractor
so
you
it's
want
more like a landlord situation. Like
okay
you have the space in the business,
hmm
and then these people are paying you to basically be there, to rent a
okay
space from you. So
yeah
then how does that landlord now, because you're a landlord, how
hmm
does that landlord make a profit in that particular space or business?
I would take a look at whatever your top line is, your
Mm-hmm.
personal top line, and they're paying you plus, and I would split out what they're paying you. And if you have your own book of business, so that's a little bit split out so you can see what's driving what, and then all of your costs. And you probably want to even split it up with whatever the rental is and the cost. So you have rent, you've got your utilities,
Right.
water usage. I don't know if they're using any of your products, or if they bring
Mhm.
their own.
Mhm.
So all of those costs, and you want to make sure that you are making at least 40%, um,
Oh,
at a
okay.
minimum. I would even say higher, 50 to 60%, because then you still have all of the other costs and you have to pay taxes and you have
Mhm.
to have enough money to reinvest. Like, what if you need to build something out, or you have a plumbing issue, or your HVAC goes out, or like, and sometimes if you're renting, those things are not something that you have to fix, but a lot of times they are too. So it's
Right.
whatever costs you have.
Yeah.
Yeah. And I would
So
have to kind of see the books, like the financials. And then there's the one thing that no one talks about is, where does the cash go?
yeah, let's talk
Let's talk
about
about
it. Where
cash.
does it go? Yeah,
So the biggest question I have is, I had 100,000 in profit and I've got like 20,000 in my bank. What happened?
yes, I love this.
Yeah.
So what happened?
You're like, where to go? And don't feel bad. Again, the savviest business owners that I know still don't know what's going on with
Yeah.
cash. And so what happens is, not everything is shown on the profit and loss. So the difference between that 100,000 that you have in profit and the 20,000 you have in the bank is what I call burn. That 80,000 grand that you're like, it just burned up, it's just gone.
Yeah.
That's what I call burn. So basically, if you are renting any equipment, well, actually not renting, if you have purchased equipment and you're paying loans, so if you have an SBA loan, if you
Yeah.
have um, some kind of economic security loan, if you've got loan on equipment. So principal payments are not going to be on your profit and loss statement. So that money, so if you have any loans, that those principal payments are going out the door as cash flow. Also, if you're taking money out of the business, owner distributions, you have to be
Mhm.
really aware of where the money's going. A really savvy cash flow report. I don't like the way QuickBooks does cash flow. We actually have a customized cash flow report that's really easy to read. But you can see like all the money that came in from your customers, all the money that you spent on all of your contractors, your employees, your people, benefits, taxes, vendors, all the money that you spent like for all the operations and admin, and then everything that you paid on your credit cards,
Mhm.
everything that you paid on your loans, and the money that you took out or put in as an owner. And so this is what you started with, and this is what you ended with. And that's the
Yeah.
easiest way to look at it. But it's going to be on your balance sheet. So if you don't know where cash went, you either pulled it out, maybe you pulled it out to pay for another business,
Mhm.
and maybe another, you have a building that you pulled it out for, maybe another location. If you have multiple locations, sometimes one location will float, cash float another. Um,
Wow.
yeah. So and then maybe they're loans or credit card payments, especially if you're behind.
Yeah. Yeah,
Yeah.
then you get the late fees and all that's where the money is going.
Yeah.
Oh, man. See, this is the beauty industry is definitely changing, which is very exciting, and they're getting more into the numbers and more into knowing this information. So I'm just like so thrilled to like listen to everything you have to say because I'm eating it up.
Yeah.
The
Numbers are
other
cool.
numbers are cool. We can make them sexy, guys. Like
Yeah. Yeah, numbers are sexy, especially when you've got some cash in the bank. That is sexy stuff.
yeah. So, I keep hearing you talk about QuickBooks.
Yeah,
I used to have QuickBooks and then I found my accountant and I love him and it's great. But how do you feel about QuickBooks? Should people have it or should they just find a really professional person like yourself and just let you do it? Like how do
yeah.
what do you say?
So, because I work a lot in, we have a lot of clients. We have over
Mhm.
200 clients,
Love it.
and usually it's not someone that's just starting a business, although we work with businesses that are starting
Mhm.
also. But a
Mhm.
lot of the times it's someone that has worked with another accountant. So, they're just switching accountants basically because they weren't maybe getting what they need for some reason. And what I have found is that when you don't have control and don't own your accounting software, it is very hard to switch sometimes. And I've actually had accountants that refused to give up the books to the client. It's not illegal. They just didn't give them, and we had to start from scratch. So, as an entrepreneur, I am like, I like QuickBooks Online. It's much more as an online, compared to all the other online accounting software. It's one that you can grow into. We have clients that are at 35 million in revenue still using QuickBooks. It's very robust and it's not expensive. It's probably more robust than Zero, Wave, FreshBooks, HoneyBooks. There's like a lot of them out there. Zoho. There's a ton of them out there. QuickBooks is really, if you want to grow, that is one that you can grow with and never have to switch out of. Why I like online versus desktop, a lot of CPAs or accountants will tell you that online is not as robust as desktop. They are incorrect. And the reason they're telling you that is because they're used to desktop. That's what they are comfortable with.
It's always a
And
stressful thing.
so it's online is just as robust, even more so because you can connect it to other things. So for instance, Vagaro connects to QuickBooks, right?
Wow,
Um,
cool.
if you
Okay.
wanted to. We actually disconnected it at one point because it was sending like too much information. We didn't need all of that and it was kind of messing it up. But we log in, get what we need, and put it into QuickBooks sometimes too. But it does, there's a lot of connections. You can connect your bank accounts to it. But what I really love about it is that I prefer for the business owner to be the primary admin. You are in charge, you are in control. You can log in and see if we're doing our work. Are we 6 months behind or only 2 weeks behind or not behind at all? If you're, especially because you've paid, you can have control over that if you decide to switch accountants.
Mhm.
You own your financials. And I think that's really important for a business owner to own their financials. And I particularly don't like it when there's when someone uses financials that the software is not owned by anybody, like there's a couple of them out there that they're proprietary software. That's really hard because you're stuck with that company. And if you're not getting good service, you don't have options. And I always want business owners to have options and
Yeah.
freedom.
Yes, I do too. Okay.
Yeah.
So
Like I want,
basically use QuickBooks.
I like QuickBooks. It's very robust. You own it. You have control. You have options. And if you don't like who you're working with, like I want you to work with us because you love us, not because you're
Yeah.
stuck.
Yeah.
That's really not what's going on in most of the industry.
I know. It's terrible. It's really bad. Like it's bad. Um wow. Okay. So now, Natalia, I'm going to switch
Mhm.
gears really quickly. What what was your biggest failure
Mm. So many.
that that got you to this point where you're like, I got to help these people. I got to help everybody and get the number straight. So, what was your moment?
So many. And we still have failures. Come on, guys.
We're entrepreneurs. Like this is get comfortable.
Yes. This is what you signed up for. I hate to
Right.
tell you. Yes,
Right.
this is what you signed up for. I'm very aware that this is what I signed up for. There are definitely moments where I feel crushed by the business. There are definitely moments that it's that things have been difficult. It's on and off. And the more you grow, you have to keep taking risks. So there's failures in that.
Mm,
Right.
that's
Um,
good.
I really believe that, so two things. The first thing is like, what was my biggest failure? And the second thing is the pattern that I see that works. Maybe
Mm.
remind me of the second thing, because I'll probably forget by the time I'm
Okay.
done with the first thing.
Okay.
My biggest failure was hiring the wrong people,
Mm.
personally. And that's why we actually talk about hiring a lot. So I've had people, you're new, you don't really know how to hire. It is definitely a skill. It's a skill that you get good at the more you do it. And if you don't know when to fire so that you can get better people, it can be really, really painful. And
Mm.
so the first couple of years, the first hire is the worst, right? It's in the sense of it is the scariest. It's not necessarily going to be the worst person. It could be an amazing person, but it is the scariest for the owner. You have to let go. You feel like you're literally walking off a cliff,
Mhm.
um, and you have no idea like how they're going to perform. Um, but when you hire people and they're not working out, my first reaction, which I think is very common, was at least they're getting the work done and something's being done, and being afraid to get rid of them if they're not a good fit. Um, and not being able to afford to hire someone else or an extra person. And so I've always found that when I've let someone linger that wasn't a good fit, it never turned out well. And as soon as I was courageous enough to let them go, things improved dramatically. I've never, ever regretted letting someone go, ever. And I've
Mhm.
actually never regretted someone leaving.
Yeah, I can attest to that too.
Yeah.
It's like, oh, it's almost like a weight has been lifted. A lot of
Yes.
times they become dead weight anyways,
They
way
do.
before. And I actually said this to somebody one time. They said, okay, Krystine, I'm gonna be leaving. And I said, my goodness, it's about time. I've been waiting for you to tell me that. Like, I already knew this. Like, what took you
Yes.
so long? That's what I said. I said, what took you so long? And they looked
Yes.
at me like, what? I was like, I knew it already. I was just waiting for you to tell me. Like, what the
Yes.
heck?
Yeah. And you know what? To make it easier, and this is very true, I feel like hiring and having employees is like very similar to dating and relationships. If it's not a good fit, you're not doing them a favor.
Right.
They know they're not a good fit.
Right. They know it. They know
Yes.
it. If you're paying attention, you're going to know it too.
Yes.
Oh my gosh. Okay. Go ahead.
And then the other employees know also. So my biggest thing is I want to respect the employees that are really that are bought into the vision, that are
Yeah.
very loyal, that really align with our core values. And core
Mhm.
values are extremely important to have in a business.
Yes.
The ones that really align, that they're working hard. If you keep someone that isn't a good fit, it's actually disrespectful to the ones that are working really hard. And
Mm.
everybody knows.
Mhm.
Everyone knows.
Yes. Yes. I feel like I have had employees come and tell me like, "Hey,
Mhm.
they suck. Can you
Yeah.
get rid of them, please?" And I'm like,
Yeah. Yeah.
Yeah.
So, and that's one of the things that we really support people on also. That's a big drive for me is to support the business owner with
Yeah.
hiring the right people, the right fit, for the right salary, the right benefits, and like really helping them work through that because that's really hard to do. And also, like, no one likes firing people. It
Mm-mm.
takes toll on everybody. So
Yeah.
having someone to support you and say, yes, this is the right decision. I'm here for you is really helpful.
What I love about what you do with all of this, with the coaching, with the hiring the right people, with all of and the money part, of course, is that it's all coming from the money
It's all coming from
aspect.
the money.
Do you know what I mean? Like it's there's yes, there's emotions and it takes a toll on us emotionally, but the whole point of business is to make money, to be profitable. And if you have a leak and it's a person, you need to seal the leak, get rid of
Yes,
them because you want the end goal. It's not hiring friends kind of deal. You know what I mean?
exactly. At the end of the day, the business trumps everything and your feelings.
Yes. That's the hardest part as a business owner, I feel like. It's the ultimate I always like to say it's the ultimate form of personal development,
It is.
personal growth. Like it really makes you be healthy.
Yes. You really have to grow as a leader and as a person. It is tough to be a business owner. And for me, I've said this before to other people. It has been the hardest thing I've ever done. I think it's even harder than motherhood in a lot of ways. It is a lot
Yes.
like motherhood. That's a lot like
Yeah.
parenthood.
Yeah, totally. Totally. I agree. I agree. What has been your favorite insult that you have ever gotten that you're just so proud of and you're like, that's my motivator right there.
Oh my gosh, this is actually hilarious, especially for the ladies in the room.
Love it. Let's go.
I
Let's do
was
it.
the accounting industry is still pretty male dominated, especially in CPAs. And just in general, the business world is still very male dominated.
Mhm.
I think there's only about 1% or so that make it to seven figures or multiple seven figures, and only 0.4% of that is women.
You
It's very,
know, that
yeah,
is really surprising because when talk to your grandparents and all that thing, like bookkeeping and account, like that has always been like the feminine kind of
yes.
job. You know what I mean? So wow, it's male. Okay.
Yes, it's still very, and a lot of bookkeepers are still like they're solo practitioners. They have a very small book of clients. They don't build out a business. or an empire. I do know some ladies that have built an empire.
Love
Um,
it.
but the story that was so hilarious was I was at a my accounting mastermind. And that's how I learned really how to structure the business, how to find resources. I have a coach. I love them. I feel like coaching and mentorship and anything that you
Yes.
can do to get you faster to where you need to be is super important.
Yes.
So I'm in my mastermind, and my fiance owns a tax firm. So he's been an entrepreneur for 20 plus years. This is like, I think, his fifth company that he's owned.
Oh,
So
nice.
he's been in the business for a really long time. And he actually is a coach in that mastermind.
Okay.
And he's standing there with three of the other male coaches in the mastermind. And so three out of the four men know me, and one of the other men actually didn't know me very well. But I've been in the mastermind for 5 years. So I walk up because I know most of them, say
Mhm.
hi,
Mhm.
and one of the guys says, "Hey," and I'm going to say a different name. "Hey, Daniel, do you know Natalia?" And he goes, "Oh yeah, sure, I know Natalia. She's James's assistant." And I was like, and James, my fiance, jumps in because he thinks it's hilarious and says, "Oh no, she's my secretary." And the other guys are like, "No, she owns her own firm. She's a baller." So, now my secret competition is I'm going to beat that guy.
Yes.
Maybe a bigger firm.
Yes, exactly. Oh my god. No, the boys.
The boys sometimes.
That's your assistant. No, she's my secretary. Oh my god, I'm gonna kill you when I get home.
I was like, okay, and I'm like silently scheming.
Yeah. Yeah,
Yes,
immediate competition. Oh
yes,
yeah, that's something I would do too. Holy cow. Okay,
yes.
final question maybe. We'll see.
Okay.
What is a question that I did not ask you that you wish that I would have, and how would you have answered?
Um, I would say probably, actually circling back to that second point, that would actually be a good question. What are the patterns that you see that work? Because
Okay.
as a CFO, as a fractional CFO, I work with like 35 different companies. So I actually get to see patterns very quickly of what's
Cool.
working and what's not working. Same thing in bookkeeping. Like we've got hundreds of clients. Especially when I don't really do bookkeeping anymore because I'm not in client work as much
Mhm.
anymore,
Sure.
which is the way it should be, right?
Right.
And we've got a wonderful team of 12. But I used to see patterns there too. But what the pattern of what works, what I see, one of the biggest patterns is making decisions quickly
Oh.
and pivoting quickly. And so if you make someone that's making a fast decision will make a decision, make a mistake, then make another decision to correct that mistake, all in a shorter period of time than someone that hasn't made a decision yet. So if you make a
Whoa.
bad decision, you pivot quickly and you learn from it. If you
Yeah.
make a good decision, you exponentially increase your result faster than someone who hasn't made a decision at all yet. So action and making a decision and taking action. I guess it wouldn't be fast decision making as much as taking action trumps everything. It's very important.
Whoa. Like you actually saw this firsthand.
Yes, I have two examples real quick if we have the time.
Yes, go. Let's have
Okay.
it.
One example, one agency that we work with a client who lost their biggest client. It was $1 million in revenue that went out the door overnight, practically. And we sat down and we looked at the numbers. We looked at what's going to be bleeding, how unprofitable, like suddenly, like how much cash do you have for the next several months? How much bleeding is there going to be? What are you going to be? When are you going to run out of cash? Because CFO work is all about the future. It's all about
Yeah.
projections. So it gives you time to make decisions before something happens. So here he comes to me like this has already happened. Like what to do next to not go in the hole or to go like get some kind of loan where they're going to break your legs. And I've seen that too. Not someone breaking their legs, but loans where I'm like, oh my gosh,
Yeah.
that's scary.
Yeah.
Um, So we talked about it, and the first thing we did is we have to get rid of people. The revenue isn't there. That means that that business also isn't there. That time that it takes to create that product is not there anymore, that service. So the first thing he did was he actually got rid of most of his team. It was painful. But
Oh,
what happened later was when he started rebuilding and rebuilding. So he actually was able to really mitigate that disaster from really being a true disaster. And
yeah.
it gave him time now because he had a little bit extra cash. It gave him time to start looking for new business all the time, and doing a better job of it. And that's the other thing is never stop looking for business because you might
Mhm.
lose a lot of it. So never stop looking for new business. Don't break that momentum. But because he was quick, he was able then to get new business, and then he started rebuilding his team. And now he's smarter, better, faster. He has more experience, he has an even better team. So when he was first upset, he was letting people go. It actually ended up being a blessing in disguise. He
Wow.
has a stronger team now.
Yeah. I
The,
can attest to that too. I can attest to that. Okay. What was the other thing?
the opposite, very similar thing happened to another client who his business was based on something that was happening during COVID. And when COVID ended, he didn't pivot quickly. And I said to him, you need to let go of your team. Like, I don't even know what they're working on.
Yeah.
Because like the business is gone, you need to let them go. And he said, no, they're really great. They're really great. And he kept holding on, running out of money, um, getting loans. He had like credit cards to the max, getting loans. The minute you start doing that, the catch up period to get back to baseline is getting further and further and further away.
Mm.
And so he finally he it I think it took him a year and a half to finally realize that he had to let go of his team, but now he still has a tremendous amount of debt at the same time.
Oh my gosh.
So um, it's still fixable. Everything is fixable, but it's the action, like the difference between one to the other. I can see that people that take action really are a lot more successful in the long term.
That is incredible because you've seen it. You
Mhm.
have actual stories behind it. Like this isn't just BS. Like this is real.
This is
Uh,
real. Yes,
wow. Yeah,
yes.
get in action. Get in action. Okay, so how can people contact you? How can they sign up for CFO? How can they do all the things with you?
Yes. So we actually have a couple giveaways for your
Oh,
audience. If they go
oh,
to, we have a webpage specifically for the Beauty Pro podcast.
yeah.
So it's going to be under zacharinconsulting.com/beautypro. Super
Okay.
easy to find, hopefully. And there's two giveaways. One is, I think it's 7 ways to find money in your business now.
Okay.
And then another one is the ultimate checklist for financial success in your business.
Okay.
Some of them are really foundational pieces, but I find that the foundation is not always there for a lot of
Yeah.
folks.
Yeah.
Um, and then the third, there's another little box where you can get on it's a scheduling link to get a
Okay.
free financial consultation, and that's how to get in touch with us. It's just to schedule
I
something.
Yes, all of this is gonna be in the show notes, you guys. Make sure you grab it. Oh my goodness, thank you so much, Natalia. I loved our call today. This was
Thank you.
great.
I loved it too. I want everybody to know that you have it in you to build an empire. Don't ever give up. Keep going, keep moving forward.
Yeah, love. All right, you guys. That's a wrap for today. Make sure to go contact Natalia and get all of the things. Until next time. Babes, how was that? Natalia had me drooling over all this money info, and I love it. If you want to connect and work with her, check out the show notes so you know how to reach her. Absolutely incredible woman. Knowing your numbers is the way in knowing how to scale your business and offer more to your team and your clients. So check it out. Leave your biggest takeaway in the comments or in a review on Spotify and Apple, and I will talk to you soon. If you loved this episode, subscribe to the Beauty Pro podcast on Spotify and Apple Podcasts so you never miss an episode. Don't forget to leave your reviews, stars, feedback so I can continue bringing the content you deserve and want most. Your feedback fuels this podcast. The more you give, the more you get back. You can follow me at The BeautyPro Coach on Instagram and Facebook. Want to contact me directly? Email me at befree@goldentruthcoaching.com.